Good morning, friends. Welcome to the weekly Saturday knowledge sharing webinar organized by Mehta and Mehta over the years now. Thanks, friends, for all your support all the while. And we keep on getting lot of good, reward and response from all the participants. Like last Saturday also, we got a lot of appreciation. Thanks. That gives us a boost to keep on doing the same. Thanks a lot. So today's webinar topic is insight into SEBI LODR Amendment Regulation 2025. Okay, 2025. And today's presenter is Ms. Jaswin Bindra, partner, Mehta and Mehta. She is in charge of our Bangalore branch. She is partner of Bangalore branch. Jaswin Bindra is a member of ICSI and is a practicing CS professional. She is All India ranker in CS Executive Examination. She is having experience in the field of corporate restructuring, IBC, FEMA, compliances, strategic DD, many such fields. She has also authored several articles in the field of insolvency and corporate restructuring and speaker at several platforms. Today's our panelist is our own Shan. Friends, you know Shan. He has been a panelist in our webinar series several times. He is always a good old friend of us and he is always there for us. So welcome Shan to our webinar. And to formally introduce Shan, he holds master degree in law from Jindal Law School, fellow member of ICSI, insolvency professional, postgraduate diploma in finance management, business administration, Indian Institute of Banking Certified Professional in NBFC professions, CII certified CSR professionals. Son, कितना सब ले लिया degree? CSR hai. You know, friends, he is not practicing because he can't practice. He is holding the position as insolvency professional, but he has passed, which is very tough exams, you know. Even IP professional find it tough and they don't give think twice. And this person has done it for knowledge purpose. That's up. Has 24 plus years of experience in compliance, legal and governance and secretarial domains in various sectors such as consulting, and member of Auditing Standard Board, expert group on Auditing Standard Board of ICSI since 2021, member of Secretarial Standard Board of ICSI 24, and was also member in 2016 to 18. Is a thought leader with research articles published in various professional journals and publication of ICSI and regular speaker, panelist at various forums on compliance, corporate governance and legal domains. Presently with the Coromandel International Limited as a senior associate vice president and company secretary and compliance officer. Oh, lot of position. Welcome, Shan. Thanks a lot for your time. You are on mute, Shan.
Yeah, I said thank you. Thank you for the very long introduction and thank you for the opportunity to be a part of this webinar. I think I'll be able to contribute to the expectations of the participants as well as the panelists from Mehta and Mehta. Thanks.
Yeah, yeah. See,
Shan, I think only one small suggestion, after acquiring so many degrees, it is high time for you to do a doctorate so that we can call you as Dr. Shanmugh Sundaram.
That was a long wish, but I will.
Oh, see, he is on that path only.
Good.
No, yet to start anything on that path, but it has always been on my mind actually.
Good.
Okay.
Good. You'll definitely achieve it. My best wishes to you.
Thanks.
And see,
Thank
there
you.
is a LinkedIn request also for you. Okay. So,
Yeah, thank you.
of course, with us, Professor Bala, moderator with us, everyone knows him. And Mr. Sudhakar, he also don't need any introductions. With this, let's start today's webinar. Friends, this, of course, everyone knows LODR keeps on updating. Now this recent one, which is just came effective last month only in March and last week. And we are holding it in April second week. So I think we are in a good time to have this webinar. Of course, I think it has impacted a lot on BRSR report, SME listed company and debt listed company. I'll not say much word because now all these companies are also subject to so many compliances. So we will say that even a debt listed private company will be subject to many compliances and it has impact on directorship as well. So with this, I will leave it to Sham for say a few words on the topic, then Sudhakar and Mr. Bala, and then Jaswin, you can start your presentation. Over to Sham, please.
Yeah. Good morning to all the participants as well as the team Mehta and Mehta team. As we are all aware that equity listed companies had their own set of compliances under the listing regulations, and this high value debt listed entities all along had a lot of compliances in terms of the listing regulations. In fact, some of the compliances relating to debt listed entities are much more onerous than the equity listed entities, and by virtue of these amendments dated on issued on March 2025, 27 March 2025. Now, the high value debt listed entities have been almost brought on par with the listed and equity listed entities, and some of the compliances are much more onerous than the equity listed entities, especially the RPT regime and all that. So it is very, very important for the people who are placed in the high value debt listed entities to understand these requirements as well as the nuances in these requirements, because especially RPTs, it's going to require a lot of planning, a lot of understanding. Otherwise, it might be difficult to comply with actually. So I request all the participants to make use of this opportunity to, raise your doubts, queries, and also, keep reading these new amendments, which is very important from the practical standpoint. Thank you. Over to you, Deepti.
Yeah, Sudhakar, please.
Yeah. Namaste and good morning, everyone. One more amendment has come. In fact, on the lighter side, yesterday I was telling that earlier we used to say that what two things are certain in life, one is death, another one is taxes. Now we can add the third one to that is amendments, whether it is on the Companies Act or to SEBI regulations. 12th December 2024, there is an 18 pages amendments have come to Chapter 4. We are yet to digest those amendments which have come, understand the nuances and the complexities. Another amendment has come, and this time it is 1 page less than last one, that is 17 pages again. A lot of ambiguities, complexes, nuances. Again, going to be this thing. Another good amount of homework for the people. In fact, though this is nothing new as such for high value debt listed entities. In fact, 2021, the listing regulations were amended wherein the high value debt listed entities having 500 crore plus, they were to comply the regulation 17 to regulation 27. But that point of time, they are given a time period that by 2023, 31st March 2023, you have to comply or you have to explain. So it was not a kind of mandatory thing. That period has been extended because the industry was finding it difficult to comply. So SEBI was kind enough to extend that to 31st March 2024, further extended to 31st March 2025. And now what they did was they have introduced a new chapter, that is Chapter 5A, for the debt listed securities exclusively listed with the stock exchanges. And for them, it is mandatory right from 1st April 2025. Very surprisingly, normally SEBI, whenever they used to bring the amendment, they used to give a breathing time of 30 to 90 days, depending upon the amendments. But this time, absolutely no breathing time. That amendment has come on March 27 and it is effective from 1st April 2025. It is a very difficult proposition according to me. And certain things what we have to comply with, of course, they have given certain leeway and certain provisions that we will discuss about that. Especially in case of private companies which have privately placed their debt and have got it listed, those companies are certainly going to face this very, very difficult to comply with. And one good thing happened is that the sunset clause was introduced, which was not there earlier. Means, suppose if any company, which is or any listed entity, which is having the high value debt listed entity, I mean, a high value debt listing below 1,000 crores, after 3 consecutive financial years, if that threshold limit is not triggered, then they can get, I mean, they don't need to comply with the provisions. Though sunset clause, it was not there earlier, which have been introduced now. This is the good part of it is. So what sort of difficulties are there and how to deal with that? And we will discuss that over the presentation of uh, Jasween. So I give a pause here and request Bala to take it forward. Thank you.
Good morning to all of you. I have a very great pleasure in welcoming you all to this particular sessions. The amendment which has come on 25th, we are discussing it today on 12th. I think probably Mehta would be the first one to discuss these amendments according to me, I think so. And as our earlier panelist said very categorically, these amendments has got its own answers because basically this amendment which has been brought out very recently is aiming to strengthen the corporate governance, disclosure and transparency of the high value debt listed entities and as well as SME listed entities subject to certain threshold limit. Because they have actually increased the threshold, rather the key threshold of applying the corporate governance now for the high value debt entities. And especially here, the related party transactions, those are all going to be really, really enforced very strictly. That is the point here, actually speaking. And on a lighter note, Mr. Sudhakar said amendment, he referred 3 things. So amendment is one of the things. I remember a picture we used to watch. There's a popular dialogue was there. Tariq pe, Tariq pe, Tariq pe, Tariq. Like that here, amendment pe, amendment pe, amendment. That is what it is happening here. So we'll have to live with it. So I leave it here because I don't want to take a bunch of a time because our presenter is going to take us through the various things our panelists will keep. I request all the participants as usual, put on your queries and put on your doubts on the chat box. We'll be taking it then and there and we will try to address to them. Lot of things are there, lot of things will come. In fact, according to me, as Sudhakar puts it, further amendments are expected to come because there are a lot many things are there, if and buts in this circular actually, as we are still going through it, because there are many things are not clarified, many doubts are there, many carve-outs are not come out actually in this circulars, so we can expect more amendments as well. I leave it there, over to Pindra. Jaswin.
Before Jaswin take up, I will just take another 2 minutes, Bala, when you said these amendments, because you see that it looks like when these amendments have been brought in, these high value debt listed entities, it seems that as if they did a cut paste of that chapter 417 to 27 regulations. Why I say so is that 12th December 2024, some major amendments have come to these regulations. Certain carve-outs have been given. Now, more or less the same thing has been brought as a chapter 5A for these high value debt listed entities. But in this, if you see those carve-outs are not there. It is very surprising. It is very peculiar. When the carve-outs have been given to equity listed entities, the same carve-outs would have been given to even to the debt listed entities also. It's an obvious thing, but it was not done. I really don't know what is the reason for that. If not today, maybe tomorrow again, they will brought in some amendments very soon. Those carve-outs will be certainly incorporated because that would not be the intention. Only thing is they want to bring out something and already some draft would have been circulated by the time it was discussed and then they have released that. But I'm sure that SEBI would have noticed this. That's what I said, that there are certain aberrations, certain complexities are there. This needs to be taken care. Certainly SEBI will take care of that. It may be again and after a couple of months, another amendment may be there. Just will take it
You're
forward, please.
You're absolutely right, Sudhakar, because what happens in many of the governmental organization, the first draft which is actually put up, it go through in many stages and it is coming to that. If you want to make an amendment, again, you have to start all over again, go through all the phases. Generally, it can be incorporated. Otherwise, it cannot be incorporated. Likewise, probably SEBI also seem to be doing like that. Whatever they decided to it, they want to bring it quickly. As you rightly said, they didn't want to give any breathe out time. 25th, they are issuing a circular. It is made a public on 27th. It is effective from 1st of April. Such a quick pause they have made it. Probably, getting through the amendments, etc. They did not have the time to go through it. So probably, as you said, the amendments will come in future. Yeah.
Yeah, Jaswin, please start sharing the screen.
Yes, a very good morning to one and all. And I would like to thank Mehta and Mehta for this opportunity of allowing me to give this presentation on the most recent amendments in LODR regulations. So we are here to discuss the SEBI LODR Amendment Regulations 2025, which became public as a public notification on 28th March 2025 and became effective from 28th March, barring a few provisions that have specific applicability specified to it, which we'll be discussing over the course of this presentation. This amendment is particularly in line with the SEBI consultation paper dated February 8, 2023 and October 31st, 2024. And these amendments were approved by SEBI in its board meeting held on December 18, 2024. So these particular amendments have introduced a new chapter, which is Chapter 5A, which is for the corporate governance norms for the listed entity, which has listed its non-convertible debt securities. So for the ease of understanding, what I have done is I have clubbed the amendments as per the particular intention and the topic that they relate to. So kindly bear with me on that. Amendments related to Business Responsibility and Sustainability Report, which is BRSR. So first amendment relates to the proviso to Regulation 3(2)(b), which earlier stated that the listed entity shall disclose the BRSR and or its assurance as per the BRSR code. Now this word of assurance has been replaced with assessment or assurance of the specified parameters as per the BRSR code. So the intention behind this is to reduce the compliance cost and foster ease of doing business. And the introduction of flexibility in BRSR core verification by introduction of the term assessment as well, rather than only assurance. And this assessment would be required to be done by a third party as per the ISF introduced in this regard, industry standard forums. Similar to these amendments, there has been a change in Regulation 34(2)(f) as well, wherein the proviso read as the assurance of BRSR core shall be obtained with effect from and in the manner as specified by the board. This has been changed again to introduce the assessment or assurance of the specified parameters as per the BRSR core have to be obtained. So any inputs on this? Particular amendments related to BRSR?
From my side.
I think you have made it very clear because as earlier, as mentioned, assurance was a costly affair because it require complete audit and financial burden to the company. But when you say the assessment, it leaves some subjectivity to the outside agency, and that reduces and the possibility of assessment. And of course, they have notified the parameters as per the industry, and which as per that it is required. Still, it is there. That is crucial. As we are also doing that assurance report, so that's why this. Thanks.
Yeah, one point is that it is not applicable to the high value debt listed entities. They can adopt it voluntarily.
Yeah.
Amendments related to entities listed on SME exchange. So regulation 15(2)B has seen an insertion now to provide that the provisions related to regulation 23, which is on related party transactions, shall be applicable in respect of the listed entities which has its specified securities listed on the SME exchange, and which is either the paid up equity share capital exceeding rupees 10 crore or net worth exceeding rupees 25 crore as on the last day of the previous financial year. And they've stated that in case an entity reaches these thresholds of 10 crore or 25 crore during the financial year, then in that case, they shall be given a time period of 6 months to comply with the RPT norms as per Regulation 23. They've also provided a sunset clause in this case where they state that if in case the SME listed entity remains below the applicable threshold for a consecutive time period of 3 continuous years, financial years, then in that case, the RPT norms shall not be applicable. They'll be exempted from the requirement then.
Yeah, just 1 minute, 1 minute, just wait.
Yes, sir.
See here, one thing to be seen is, 1 minute. Yeah. So what it says is that these threshold limits, share capital exceeding rupees 10 crore or net worth exceeding rupees 25 crore, as on the last day of the previous financial year. They are not mentioned as per the latest audited financial statements. So the moment these threshold limits are triggered as on 31st March of that financial year, immediately this, this regulation 15(2)B starts applicable to you. That is number one. Number two, it also said that in case these threshold limits are triggered during the financial year, then of course within some 6 months time, you have to comply with this. Now turnover, every company definitely preparing their monthly financials. At least the turnover, they will definitely come to know how much is going to be my turnover on monthly basis. So you will come to know whether you have triggered the threshold limit or not. But how you will do your net worth, that is the catch. So these SME companies also have to keep a tab on the net worth on month-to-month basis. And whenever you trigger the threshold, you have to ensure the compliances within 6 months thereafter. Say, for example, as on 31st March, these threshold limits are not triggered. But immediately after 1 month or 2 months, suppose that the thresholds are triggered. So within 6 months, you have to comply with that. So whether you, as a secretarial auditor, whenever you are doing any secretarial audit of these SME listed entities, as far as applicability of this regulation is concerned, you have to also ask the client that how they are keeping a track of this net worth issue. So at least you should understand that, okay, during the year, financial year, whether this threshold is triggered or not triggered, how they have ensured that. That is very important for you. Yeah, go ahead.
Yeah, this is a very finer point what you have brought out, Sudhakar, when you say the previous financial year. Because all along, our mindset has been the last audited financial statements. But here the question is not that they are very tactfully given the previous financial. That means for applicability to the 1st of April 25, as of 31st March 25, one has to find out. That is the catch here. Yeah.
Please, and second thing, I want to give another point, very emphasis is that, I mean, in general, whenever I interact with our fraternity colleagues, they think that these SEBI regulations or any amendments, mostly they're applicable to the company secretaries in practice. But the people who are in service, the people who are in practice are to be also aware of each and every amendment, the finer points also, because now the secretarial audit scope has been extended. And it is applicable to private companies also, depending upon their borrowing limits. And now it has been extended to SME listed entities. So you have to be very familiar with this. And finer points are to be understood. And during your audit process, these are to be inbuilt so that you won't miss anything. Yeah.
Thank you for the input, sir. A new insertion under Regulation 23, again related to SME listed entities, is which is effective from 1st April 2025. So, in case of listed entity having their specified securities listed on the SME exchange, a transaction with related party shall be considered material if the transaction entered into individually or taken together with the previous transactions exceeds rupees 50 crore or 10% of the annual consolidated turnover of the listed entity as per the last audited financial statements, whichever is lower. So this is to set the material RPT norms for SME listed entities.
Somebody has actually put up a question here. By changing the word assessment, by changing the word assessment, what would it actually mean? Can the auditor issue limited review and or audit reports for BRSR?
See, according to me, assurance is a larger and broader word than of the audit. Audit is only a post-mortem kind of thing, whereas assurance is not only the past, present, and future also it is covered in that. So, according to me, by changing the word from audit to assurance, they're broadening the compliances. That's what I feel. Or even assessment as a matter of fact. Yeah, go ahead.
Yeah, probably assessment, in my view, assessment would mean, taking into account what has been done on the BRSR front and reporting that rather than giving an assurance on the, from the independent certification perspective. It's more of reporting the current state of things with respect to BRSR in a company rather than giving an assurance that everything as per law has been complied.
Thank you, sir. Amendments related to number of directorships. So, Regulation 17A has been amended, and the timeline given for the same is within 6 months from the date of notification, that is, which would be around 27th April 2025. So, the explanation given has now been amended to say that the count for the number of listed entities on which the person is a director or independent director shall be cumulative of those entities which are equity listed on the stock exchange as well as high valued debt listed entities. Earlier, high valued debt listed entities were kept out from the calculation. However, now each listed company will have to go back and check the number of the directorship held in high value debt listed entities as well. However, a second explanation has been inserted to provide that for the purpose of this regulation, the directorship held by the person as an ex officio on an ex officio basis due to the statute or applicable contractual framework, particularly in case of PSUs and entities set up as public-private partnership, shall not be included in the calculation of the maximum number of directorships. And this will take effect within 6 months from the date of publication of this amendment or the date of AGM, whichever is later for the company.
Just 1 minute,
Similarly,
go back.
yes.
1 minute, just wait. Please go back.
Yes, sir.
See, here, what they did was, now they have brought into the maximum number of directorships. Earlier, high value debt listed entities was excluded. Now they have included that. With this, what happened is the apple cart is getting disturbed. Suppose I am a independent director or a director of 7 listed companies already. And I am also a director of 2 high value debt listed entities. So total makes 9. But earlier, those 2 high value debt listed entities were not covered. So I could have accepted 7 listed entities and as many as high value debt listed entities. Now, because they have changed the definition, this definition of the maximum number of directorships, now it is imperative for me within the time given, that 6 months, to comply with this particular provision or the amendment. I have to resign myself from the directorships of whatever the companies have to, and bring that maximum number of directorships within 7. Whether I am a director of a listed company or I am an independent director of a listed company. This will certainly put certain directors into difficulty. And even certain companies also, as a matter of fact, they have to relook into the whole thing. Shan, would you like to say something on this?
Yeah, already there have been, reports, saying sufficient number of independent directors is not available. And this is going to pose another problem for the entity, listed entities. And the other thing is that I think the thought process of SEBI is that they are trying to, bridge the arbitrage, regulatory arbitrage between SPDLEs and equity listed entities. They're bringing it on par almost.
They
See, in
want,
fact,
sorry.
yesterday somebody was asking me this question. Now, even a private company which has got its debt listed on the stock exchanges is also a high value debt listed entity if it is triggering the threshold limit. Now, his question is why this high value debt listed entities have been brought under this maximum number of directorships. See, Sean, in fact, according to me, my view, I'm telling the participants is that the way the kind of responsibilities which have been entrusted upon the directors of listed entities, especially in case of independent directors, if a director is exclusively having only directorships without any other vocation, he may be able to do some kind of a justice. But I'm sure that every independent director has have his vocation of his own. He may be in practice, he may be in service, he might be running some NGO, something like that. He must be doing it. How he will get the time to understand all these things? If really somebody takes his independent directorship seriously, they will not be able to do it. In fact, 2 years before at one of the forums of corporate professionals, I have said this thing. This 7 is to be reduced to 4, if not 3. That's what my personal view. And now what happened is the high value debt listed entities also more or less are equated with the equity listed entities as far as the corporate governance norms are concerned. If any director has to spend that, the ensure the compliances, they have to spend sufficient time to understand the complexities of the corporate governance when they are incorporating in those companies. They have to spend time. Without that, they can't do it. Say, for example, now even the high value debt listed entities also have to constitute the committees, which Jaswin is going to deal with. And those committees are having the same responsibilities as referred to in Schedule 2. And now you see the audit committee. Suppose if I am a director of a high value debt listed entity and I'm a member of the audit committee, you see the amount of, or member of risk management committee, see the amount of work what I have to do. So certainly this particular thing, they have brought in the high value debt listed entities also, the directorship into the maximum number of directorships. It is good. And in fact, they may have to bring it down even with the 7 limit also to 4, if not 3. That is what my personal view.
Yeah, if I may add to what you say, I agree to what you said. If you look at the universe of high value debt listed entities, I'm sure at least more than 50-60% of it would be NBFCs, market intermediaries, or companies which would be having a sectoral regulator. So that itself poses, another set of compliances from various sectoral regulators. So probably it is rightly, done by SEBI that, they have factored in the high value debt listed entity in the overall cap of, number of directorships.
Yeah, Jaswin.
Somebody has put a question here actually. Can a SME listed company grant the loan to the promoter group company which will fall under the RPT? If yes, what will be the threshold and the procedure for the same? As it is part 2, 2F, 2B is referring this, but not in the part of ZC. That's what he is saying here. I think just when you are going to discuss the RPT separately, this will get answered at the time. I think.
Yeah, correct.
Yeah.
Similarly, in line of the previous amendment, even for the counting of the number of committees in which a director can be a member and chairperson, Regulation 26(1)(a has been state that the director shall not be a member in more than 10 committees and chairperson in 5 committees. And for the calculation of these limits, high value debt listed entities shall also be included. So the limit of committees on which the director may serve in all public limited companies, whether listed or not, shall be included, and all other companies, including private companies, foreign companies. Earlier, they had also excluded high value debt listed. However, this omission has been omitted, and companies under Section 8 shall not be included.
Sudhakar, somebody has put a question here. If a director is on the board of a company which is a equity listed and debt listed as well, in that case, the directorship would be counted for 2 equity and equity, or it will be counted equity and debt separately or jointly.
No, only one.
That will be
Not
only one.
Because they are talking about the company being the one, whether it is debt or listed, it will be only one. It will not be 2. It is not as per the security listing, as per the company it is. Correct.
Yeah.
In
Even
fact, you
from
have to
the
also
compliance.
see. Yeah, sorry, Shan,
Yeah,
go ahead. Yeah, please go ahead, Shan.
Even from the compliance point of view, a company which is both equity listed and debt listed, they will follow the norms only applicable to the equity listed. They need not follow this Chapter 5A actually, except for the additional disclosures or compliances. Yeah, please go ahead, Sudha.
Yeah, what I was trying to say is, if you see the amendments to, this listing regulations amendment 25, they have used the words listed entity as well as high value debt listed entity, HDLEV, the abbreviation. So we have to see that ultimately whether it is a listed entity or high value debt listed entity, they are referring to the same. Only that, again, the same thing. This is a cut paste kind of an issue. They might have taken the basis of 17 to 27 regulations. There, some changes have been made. In that process, what happened is that both listed entities appearing, sometimes HD, high value debt listed entity, that abbreviation is also appearing. But you have to read ultimately both are the same, one and the same only. They are referring to the high value debt listed entity only. Yeah.
Yes, go ahead. Just wait.
I think some technical issue is there. It's got stuck. Justin, you can.
When you are on mute.
No. Her technical issues is stopped disk. Just 1 minute there.
I'm sorry, I got dropped off because of some network issue. I'm just resharing the screen again.
Yeah, sure.
Yes. So coming to the next amendment. Which is the elephant in the room, which is amendments related to high value debt listed entities under the amendment regulations. So regulation 15(1)A has been amended and effective from March 31st, 2025. So prior to the amendment, the value or the threshold limit for high value debt listed entity was an outstanding value of listed non-convertible debt securities of rupees 500 crore or more. However, post the amendment, they have enhanced this limit to rupees 1,000 crore. So post amendment, the regulation reads as the provision related to regulation 16 to 27 of this chapter shall apply to a listed entity which has listed its non-convertible debt securities and has an outstanding value of listed non-convertible debt securities of rupees 1,000 crore and above.
And one more thing also is that they have used the word, though just when you have not used it here, it is the principal outstanding. That is 500 crore or 1,000 crore. So principal outstanding means, according to me, it is excluding the interest outstanding, if any. So suppose, for example, if there is a 900 crore debt is there and 1,150 crore interest outstanding is there, I need not combine that 900 plus 150 total 1050. So I am a high value debt listed entity. Answer is that is not the correct thing. Interest portion is to be excluded. Only principal outstanding is to be taken into account for triggering the threshold limits. Yeah.
Yes, sir. Thank you, sir. Proviso to Regulation 15(1)A has been substituted, which states that provided that in case of value of the outstanding listed non-convertible debt securities becomes equal to or greater than 1,000 crore during the course of the year, then in that case, the high value debt listed entity shall ensure compliance within 6 months from the date of the trigger. And the disclosure of such compliance shall be made in the corporate governance report on or from the third quarter following the date of the trigger. So that's a timeline given to them for the compliance. Further, an additional explanation has been added to Regulation 15(1)A to state that in case a high value debt listed entity has its specified securities listed, it shall comply with the provisions of Regulation 15 to 27 of the LODR regulations. So this states that any high value debt listed entity having non-convertible debt securities and specified securities listed shall comply with the corporate governance norms under Regulation 15 to 27.
Here, what they have to do is they have to comply with 15 to 27 of Chapter 4, in addition to that of Chapter 5A. Earlier also, there are certain companies which were having their specified securities listed as well as debt securities listed. So we used to comply with Chapter 4 as well as Chapter 5. So when we say that means there may be some kind of a higher compliances on the whichever is the one, you have to ensure those things. So though to a large extent, Regulation 17 to 27 are in alignment as far as Chapter 5A is concerned, there are certain areas which the alignment is not there as such. So if your company is specified security listed, that is equity listed as well as high value debt listed, please ensure that you are complying with Chapter 4 as well as 5A also.
Additionally, like Sir Sudhakar Sir had mentioned in the opening remark as well, an insertion of a sunset clause has taken place, which earlier did not exist. So earlier, once the corporate governance norm became applicable, they used to remain applicable throughout, irrespective of any changes. However, through these amendments, SEBI has introduced a sunset clause stating that once Regulation 15 to 27 becomes applicable, and the said regulations will continue only till the limits, the threshold limit of 1,000 crore as on 31st March is reduced, and it remains reduced, the threshold, for a consecutive time period of 3 financial years.
Somebody
Yeah,
has
further
actually
to
referred
what Sudhakar was. Yeah, go ahead, sir.
No, you go ahead. Then I'll tell you. Yeah, please
No,
go ahead.
further to what Sudhakar has said in terms of complying with Chapter 4 as well as Chapter 5A, I think there will be some issues because of the misalignment between the RPT provisions under Chapter 4 and Chapter 5A, because Chapter 5A does not take into account does not factor the amendments which has come on December 2024. So there are certain disconnect between the RPT provisions. How that will pan out is something to be seen for companies which are both equity and debt listed.
Yeah, here somebody has put a question here. One question that if a company is both equity listed and debt listed, this regulation 15 to 27 of the LODR will be applicable. That is what he says. Understand. What about the provision that are being actually carved out in 12th December 2024 amendment for the equity listed entity, but not for debt listed entity? Now a company has to follow those provisions as per 15 to 27 Chapter 6A, specifically for those provisions which are carved out. I think this is exactly the point you brought out in the opening remark.
Yes.
What you said,
Yes.
yeah, that is the question he is asking here.
Especially
Here,
in
what you have
RPT,
to
there
do
are
is
some differences. How this will be handled is something to be seen.
correct. Yeah, Shan.
Yeah, over to you.
Yeah.
Over to you, I'm done.
No. What I was telling is that, see, that's what exactly I have mentioned in the beginning. The carve-outs which were provided in the Chapter 4 have not been provided in the Chapter 5A. Now, what happens is you have to ensure compliances with both. So when you are ensuring that, okay, carve-outs have been given in Chapter 4, which are not been given in Chapter 5A. So when you are complying with Chapter 5A, what are the compliances are there as far as RPTs are concerned? You have to ensure those compliances. See, because again, Regulation 23 and Regulation 62, I mean, whatever it is that I'm not very familiar with that Regulation 62 sub-regulations, but that equivalent regulation of RPT in Chapter 5A is concerned, if they are not in alignment, if they are different, you have to ensure compliance with that RPT regulation as far as Chapter 5A is concerned. You treat it as if there are two set of regulations and ensure the compliances accordingly. Just like your Companies Act, at certain places, Companies Act has given exemptions, listing regulations have not given, and vice versa. So, as a listed company, what you do, you have to comply with both Companies Act as well as listing regulations, which we are doing it. Now, same is the case here also. Chapter 4 and Chapter 5A, there are two different regulations. You take it like that and ensure the compliances accordingly.
One more question has come up. An Indian flagship group where 10 companies are listed and AOA respective companies provide for the provision of the senior-most promoter. One minute. Senior-most promoter shall be the chairman of the companies. How the provision of directorship of the listed companies will affect to set the promoter and his/her chairmanship in their any way out?
They have to
You will
comply
take it.
with the provisions of the law, LODR, whatever it says.
See, chairmanship is not going to get affected. Now, only directorships are going to get affected. And he's talking about the chairman of the company, not of the committee. So even that committee memberships may get affected. That is 10 maximum. But that also you have to take only, that chairmanships are only 5. There also you have to take only audit committee and I think, if I'm not wrong, NRC, I think.
Yeah, correct. NRC and audit committee.
So
NRC
these are
and
the
audit
two
committee.
committees these are the two committees which have to take. Whereas he is questioning about the chairman of the company. So that is not going to get affected at all.
Because under Companies Act, there is no chairmanship of the companies. It all talk about chairman of the board or the committee meeting. That is the clarification Sudhakar is trying to say. Yeah.
A listed company has actually demerged in the manufacturing unit and does not have any manufacturing unit on standalone basis on March 25. BRSR is applicable to the company, and in that case, do the company provide productivity details, BRSR, or can simply mention no, since it is the manufacturing unit, not the manufacturing unit as on March 25.
It's very specific question, not as regards to the amendment actually.
And he's trying to answer is that BRSR, for the BRSR report preparation, you will have to collate data on a whole company basis, especially for a large manufacturing companies. The details would come from the different units, different manufacturing units. So the question seems to be if one of them such manufacturing is demerged during the financial year, whether while preparing the BRSR report, he needs to factor in that unit or without factoring that unit, the reporting has to be made is the question. In my view, there is no specific answer in the BRSR provisions in this regard. So, if it's as a matter of good governance, it may be good to report, and with a comment that this has been demerged from so and so date, or specifically give only with respect to that unit separately.
Yeah, exactly. It will depend on the facts of the case, when your merger is affected, during the year, what is the applicability. Accordingly, it will become. So we respect Mr. Raghu, your question, but it requires facts and accordingly it will be answered.
1 minute, Dipti. See, in case of BRSR, it is not only talking about manufacturing unit. It is talking about lot many other things. Wherever the things are not applicable to you, you can always mention it is not applicable. But if your company is coming under the purview of that BRSR reporting mandatory, you have to prepare because BRSR is depending upon that 9 principles. Out of the 9, manufacturing is only linked to, I think, at the most 2. Whereas there are so many other principles out there which are not connected to the manufacturing unit. So you need to say that wherever it is not applicable to you, just say that and close your BRSR accordingly.
Yeah,
Yeah,
definitely.
go ahead.
Yes.
I think, see, we have to take these questions also in alignment. Otherwise, what will happen is
Just,
all of it out of the blue,
just
if we are
in
bringing BRSR,
Telling
we
that
will lose the continuity. We should not take up the questions random like this. We have to keep it at the end.
is our attention will move, Mr.
Yeah,
Bala,
correct.
that it
Correct.
is not
Okay.
related to amendment.
Okay.
Yes. So moving on to the next amendment, which is insertion of a complete new chapter, which is chapter 5A for the corporate governance norms for a listed entity which has listed its non-convertible debt securities. So Regulation 62B has deals with definitions related to this particular chapter, wherein they have defined independent director, meaning of the same is in alignment with Regulation 16.1. But only a proviso has been added to the definition to state that in case a listed entity, which is a body corporate, mandated to constitute its board of directors in the manner specified under any specific law, or an entity is set up under a public-private partnership model or structure, the non-executive directors, other than the nominee directors of such entity, shall be treated as the independent directors. Also, they have defined public-private partnership to mean public-private partnership between a public authority and a private SPV selected on the basis of an open competitive bidding or on the basis of memorandum of understanding within the relevant authorities.
Mostly these are for infrastructure companies, wherever they are putting up this infrastructural facilities like roads, ports, what's called as, this airports and so many things like that, where public and private partnership is there. This is what it's talking about that.
Right.
Yeah.
Regulation 62C dealing with applicability. So this chapter shall become effective from April 1, 2025, and it shall become applicable to the listed entity which is only its non-convertible debt securities with an outstanding value of rupees 1,000 crore or more and does not have any listed specified securities. And these limits are to be determined as on March 31st, 2025. Further, they've provided that if the value of the outstanding listed NCDs becomes equal to or more than 1,000 crore during the financial year, then the entity shall be required to ensure compliance within 6 months, and disclosure of the compliance shall be made in the corporate governance report on or from the third quarter from the date of the trigger. Further, a sunset clause has also been introduced, which states that the regulation shall continue to be applicable till the value of outstanding listed debt securities as on 31st March in a year reduces and remains reduced below the threshold of 1,000 crore for a period of 3 consecutive financial years. And in case of InvITs and REITs, their specific regulations shall have effect as well. So it has to be read simultaneously. So any inputs in this applicability?
No, that's fine.
Yeah, that's fine.
They have rather
Uh,
given clarity. Yeah.
Yes. In case of a high value debt listed entity under insolvency and bankruptcy code or undergoing corporate insolvency resolution process, regulation 62D, F, G, H, and I, which relate more to the board of directors, shall not be applicable, and the responsibility for compliance shall be upon the insolvency professional appointed in the matter. And of course,
Ye-
this chapter has to be read simultaneously with the Companies Act.
Somebody has put a question on the applicability. Does the applicability mean that Chapter 5A is applicable only to such entity whose only high value debt securities are listed and does not have any listed securities? They are not in conflict with the Chapter 5 or 5A.
See, you have to see the definition of debt securities. What it talks about is high value debt listed securities, which are falling under the definition. Only those are to be taken. There are certain, if you, for this, you have to go to the non-convertible securities regulations where it is defined. What is a debt security? It is defined there. So only those debt securities which are listed, for that, this chapter 5A is applicable. If there are debt securities without any fixed time period, or if they are regulated by the Reserve Bank of India, those are not falling under this. So that is what the demarcation is. So you have to read that non-convertible debt security regulations. If I'm not wrong, I think that is 2008, and equivalent SEBI regulations are also there. So that is what it is talking about. Okay.
Yeah, Justin.
Yes. Regulation 62D related to board of directors. So this talks about the board composition in case of a high value debt listed entity. The company shall always ensure optimum combination of executive and non-executive directors and have at least one woman director, and at least 50% of the board shall comprise of non-executive directors. It also talks about the appointment of independent directors. So, in case the chairperson is a non executive director, 1/3 of the board shall comprise of independent directors. And in case the chairperson is a non-executive director, then in that case, half of the board should comprise of independent directors. And if the non-executive director is a promoter or is related to the promoter, being the chairperson, then half of the board shall comprise of independent directors. The requirement of shareholders' approval in certain case of appointments. So, where a person being a non-executive director has attained the age of 75 years, a special resolution shall be required to be passed in respect of such appointment. And the appointment or reappointment of a person on the board shall be taken at the next general meeting or within 3 months. In case of a public undertaking, the approval shall be within at the next general meeting. Further, in case of managing director, whole-time director, or manager, any person who was earlier rejected by the shareholders to be appointed in the company in such positions shall require an approval of the shareholders to be appointed, and the explanatory statement shall provide a detailed reason for rejection and justification for reconsideration of the appointment by the NRC. Provisions related to continuation of the directorship shall be subject to shareholders' approval at least once in every 5 years from the date of appointment or reappointment. In case of continuation of directors as on 31st March 2025 without approval for last 5 years or more, shall be subject to approval in the first general meeting that is held after the 31st March 2025 due to the introduction of these corporate governance norms. And not applicable to whole-time directors, managing director, manager, or independent director if the approval of the shareholders for reappointment has already been obtained. This will also not be applicable to court or tribunal appointed directors or nominee directors of the government, other than in case of PSUs or in case of a public-private partnership model. Further, these regulations state that the director vacancy shall be filled by the listed entity within 3 months from the date of such vacancy. And in case the vacancy is due to expiration of the term, then it shall be filled not later than the date on which the office was vacated. The board shall meet at least 4 times in a year and with a maximum gap of 120 days between 2 consecutive meetings. The quorum of the board meetings shall be 1/3 of the strength or 3, whichever is higher, with at least requiring a presence of at least 1 independent director. The board shall be required to periodically review compliance reports pertaining to the applicable laws, as well as the steps that are taken to rectify non-compliance. This is also applicable for equity listed companies. However, this has been introduced for high-value debt listed entities as well. The board shall ensure succession planning and lay down a clear code of conduct for the duties of independent directors as per the Companies Act, as well as for the board and senior management.
1 minute, just go to the previous slide.
Yes,
See,
sir.
here in the first bullet, I think somebody is talking here. In the first bullet, it says that director vacancy shall be filled by the listed entity within 3 months of the vacancy. Whereas vacancy due to expiration of the term filled in not later than the date offered before it is vacant. That means the first action is the reactive, second is should be proactive. That means during the year, if any director's term is getting expired, before the expiration, you have to appoint a new director by way of a postal ballot, or in the previous AGM itself, you have to appoint it. There, it should not happen that term got expired and you are taking the 3 months this thing. So by the time that vacancy is arising, already somebody is there in place. It should happen like that. So that is called as proactive action. Yeah.
Thank you for your input, sir. The board shall be required to recommend the fees and compensation paid to non-executive directors, including independent directors, which shall require shareholders' approval. However, this is not applicable in case of sitting fees of non-executive directors or independent directors. The board shall also be required to specify the maximum limit of stock options to be granted to non-executive directors. And the approval of shareholders by special resolution shall be required every year if the annual remuneration to a single non-executive director exceeds 50% of the total remuneration paid collectively to all non-executive directors. Independent directors shall not be entitled to stock options, and the fees paid to executive directors who are promoter or part of the promoter group shall require special resolution by shareholders if the remuneration exceeds 5 crore or 2.5% of the net profit of the company. And if more than one such executive director aggregates to more than 5% of the net profit of the company. The CEO and CFO shall be required to provide a compliance certificate to the board, even in case of high-value debt-listed entities. The board shall lay down procedures to inform about the risk assessment and minimization procedures. And every board shall be required to frame, implement and monitor risk management plans. The board of directors shall evaluate the independent director's performance and the fulfillment of independence criteria on a regular basis. And the explanatory statements to the notice for any special business shall set forth the recommendation of the board to the shareholders on each of the agenda items. Regulation 62E relating to maximum number of directorships. So even in case of high value debt listed entities, a person may serve as a director in maximum 7 listed entities. and a person can hold the position of independent director in maximum 7 listed entities. We've already seen the calculation for the same. If the person is serving as a whole-time director or managing director in any listed entity, a person can be an independent director in not more than 3 listed entities. For the calculation of the same, we have to include the directorships in equity listed as well as high-value debt listed entities. However, directorships held ex officio in public sector undertakings and entities under the public-private partnership arrangement have to be excluded for the purpose of this calculation. And these provisions shall become applicable within 6 months from the date of the publication of these amendment regulation, which would land up to 27th September 2025 or the date of the AGM, whichever is later. Regulation 62F relating to audit committee. So high value debt listed entities shall be required to constitute an audit committee with a minimum of 3 directors, and 2/3 of them should be independent directors. And all the members who are forming a part of the audit committee shall be financially literate, with at least one having accounting or related financial management experience as a part of their profile. The chairperson of the audit committee shall be an independent director and shall be required to be present at the annual general meeting to address the queries of the shareholders. The company secretary shall act as the secretary to the audit committee, and the members shall meet at least 4 times in a year, with a maximum gap of 120 days between 2 consecutive meetings. The quorum for such meetings should be 1/3 of the total number of directors or 2 members, whichever is higher, with at least 2 independent directors required to be present. Regulation 62G relating to nomination and remuneration committee. So high value debt listed entities shall also be required to constitute a nomination and remuneration committee with a minimum of 3 non-executive directors, and at least 2/3 of them shall be independent directors. The chairperson must always be an independent director, and the chairperson of the company may be a member, but not a chairman of such committee. The chairperson may attend the annual general meeting to answer the shareholders' queries. The NRC shall meet at least once in a year, and the quorum for such meeting should be 1/3 of the total number of total members or 2 members, whichever is higher, with at least 1 independent director. And entities which are not companies or body corporates or set up under the public-private partnership model, the function of the NRC shall be as per the particular statute applicable to that company. Regulation 62H relating to stakeholder relationship committee. The board, in case of a high value debt listed entity, the board shall either through itself or through a constituted committee discharge the functions of the stakeholder relationship committee. It shall, if the board decides to constitute a separate committee, then in that case, it shall have at least 3 directors, with at least one of them should be an independent director. The chairperson shall be a non-executive director, and the chairperson shall attend the annual general meeting to answer the queries of the debenture holders specifically, since this is a high-value listed entity. And the members shall meet at least once in a year for a stakeholder relationship committee. Regulation 62I, Risk Management Committee. The board of a high-value debt listed entity shall either itself or through a separately constituted risk management committee or the audit committee shall discharge the functions of risk management committee. It shall be constituted with a minimum of 3 members, with majority of them being the board members. And at least one of the member of the risk management committee should be an independent director. The chairperson must be a member of the board, and senior executives of the companies may be the members of such risk management committee. The members shall be required to meet at least 2 times in a year, with a maximum gap of 210 days between 2 consecutive meetings. And the quorum for such meetings should be 2 members or 1/3 of the total number of members, whichever is higher, requiring a presence of at least one board member. The functions of the risk management committee should also include ensuring cyber security in the company.
Yeah, the one difference between this committee and the other committees is that, this is by and large a monitoring and review committee. There may not be any, major decision making in this committee except for some suggestions, recommendations. And again, this is one committee where the senior executives of the company can be a member. Whereas in other committees, it is only the board members who can be members actually. So that's the difference between this committee and the other committees, envisaged in the listing regulations. Yeah, over to you.
Thank you, sir.
Just wait,
Yes.
before you
Yes.
go to this Vigil mechanism, one point I have forgotten to mention about the appointment of board of directors in the case of vacancies. See, there they said that within 3 months you have to ensure that appointment. But unfortunately, the carve out which was available under Chapter 4, wherein they said that whatever the time taken by the permissions what you have to obtain from the sectoral regulators, that was excluded in the 3 months. Okay, say for example, if you have to appoint a director for a banking company or NBFC company, you have to have RBI approval, insurance companies, IRDA, like that it is there. So those approvals, the time definitely it is not in your hands, but it is in the hands of the regulator concerned. Sometimes it may take some 3 months, 6 months, 9 months, like that also. So rightly so, they have that time period has been excluded under Chapter 4. But unfortunately, that exclusion is not there in Chapter 5. But certainly, according to me, it is not in the hands of the company concerned. You can't comply with that, and whenever there is a non-compliance and all, you have to explain it to the SEBI. But I'm sure that, as I was mentioning, there were several issues like this, which SEBI has to definitely taken care of all these issues, and they have to what's called as an okay bring another amendment taking care of all these leftovers. Yeah.
Moving on to Regulation 62J dealing with Vigil mechanism. The high value debt listed entities shall formulate a Vigil mechanism or whistleblower policy for the directors and employees to report genuine concerns, and they must provide an adequate safeguard against victimization and provide direct access to the audit committee chairperson in appropriate or exceptional cases. Regulation 62K relating to related party transactions, which shall become effective from April 1, 2025. So, high value debt listed entities shall formulate policy on materiality of related party transactions, including threshold limits, which shall be approved by the board and reviewed at least once in every 3 years. The material related party transaction, as per the regulation, shall be or related party transaction if individually or taken together with earlier transactions exceeds rupees 1,000 crore or 10% of the annual consolidated turnover, whichever is lower, and transactions that involves payments to related party for brand usage or royalty will be considered material if they exceed 5% of the annual consolidated turnover of the high value debt listed entity. All related party transactions and subsequent material modifications shall require prior approval of the audit committee, and only independent directors within the audit committee shall approve the related party transactions. The audit committee shall specifically define material modifications and disclose the same as a part of the materiality policy. a related party transaction to which the subsidiary of the listed entity is a part, but the listed entity is not, shall require prior approval of the audit committee of high value debt listed companies if the transaction, together with the previous transactions, exceeds 10% of the listed entity's annual consolidated turnover as on the last audited financial statements. Further, in case of related party transactions to which again the subsidiary of the high value debt listed company, debt listed entity is a party, but the high value debt listed entity itself is not, shall require prior approval of the audit committee of the high value debt listed entity. In case the value of such transaction taken together with previous transaction exceeds 10% of the subsidiary's annual standalone turnover, which will be calculated as per the last audited financial statements.
Just hold for a minute this way.
Yes,
See,
sir.
there is an aberration here. In regulation 23, what happened was they have given that 10% of the consolidated turnover or 1,000 crore, if I am not wrong, whichever is less. Okay. And from that is up to 31st March 22, and from 1st April 23, they said that instead of consolidated turnover, it is the turnover of the subsidiary.
Subsidiary.
Okay, so there was a distinction between those two sub-regulations. Whereas here, this is 62, 3B and 3C. If you say the first one, the language is the same. RPT to which subsidiary of a listed entity is a party, but the listed entity is not. Prior approval of the audit committee of high value debt listed entity is required if the transactions together with the previous transaction value exceeds 10% of the listed entity's annual consolidated turnover as per the last audited financial statements. There is no and or or. Now, next sub-regulation is again the same thing. RPT to which subsidiary value, earlier they used the word listed entity, and in the second this thing, now they are using high value debt listed entities. Both are the same.
Yes.
Is a party.
Correct.
In the first one, they said, but the listed entity is not. And here they say, but the HVDLE is not. Rest of the language is the same, except that instead of exceeds 10% of the listed entity's annual consolidated turnover, they said that exceeds 10% of the subsidiary's annual standalone turnover. What does this mean? Which I have to comply with? Should I comply with 62B or should I comply with 62C? This is very peculiar. But now, if the question comes till the time this has been clarified, according to me, what we have to do is we have to see the whichever is the higher pedestal, the compliance with the higher pedestal, conservative interpretation, you have to take it. In that case, it should be 10% of the subsidiary's annual standalone turnover. You cannot take the consolidated turnover, according to me. So we have to take the conservative approach. In the conservative approach, I have to take the subsidiary company's annual standalone turnover. And this is also the same as on date, as far as regulation 23 is concerned. Okay.
Yeah, only thing is that as you said, there is 1,000 crore, lower limit as well.
Yeah.
Rajesh Patel is actually saying here, regulation 62 to K.
And I think there's, Mr. Bala,
Yeah.
Mr. Bala, let her finish her other of this slide, no? Then it's yet half the just yeah. Okay.
Wow.
This slide is not complete still.
Yes. The requirement of high value debt listed entity audit committee prior approval will not be required if the listed subsidiary is a party to such a transaction. And the regulation 23 are applicable to such listed subsidiary. For related party transactions of unlisted subsidiaries of a listed subsidiary, the listed subsidiaries audit committee's prior approval shall be sufficient in such a case.
Yeah, here he said regulation 62K, identical provisions of 23(2) is the subsidiary and also in the high value debt listed entity. The exemption should be available even in case of the high value listed entity subsidiary, as a subsidiary will be required to independently comply with the regulation 62K, similar to that provided in the regulation 62K6. That's what he says.
I think this
compliance
which they have given.
compliance is different. Yeah, Shashank, go ahead.
Yeah, these exemptions they're given, they've just simply copy pasted from the equity chapter. It should have been a, regulation.
I think some technical glitch.
Is also an HVDLE. That's how it should have been actually.
Chan, yeah,
Whereas what they,
there was a technical in between break. We were not able to hear. Can you repeat, please?
okay. This exception, what they have given, that this will not be applicable if the other entity is also a listed entity and if regulation 23 and 15 applies to it. This should have been actually if that entity is also a HVDLE. They have simply taken it from the regulation 23 and put it here actually. In other words, they are envisaging an equity listed entity being a subsidiary of HVDLE. That's what they're envisaging here, but actually it should be the other way. It should have been an HPDLU. That's what I feel. And coming to the question, exemption should be in subsidiary. Yeah, that's what the question is also relating to. What happens if that subsidiary is also a HPDLE? Whether will they get the exemption or will they have to undergo this?
Shan, one
Yeah,
minute.
correct.
You meant to say here in chapter 5, listed entity means you are talking about equity listed entity and high value debt listed entity means the debt listed entity. Is it the case?
No, I'm talking about especially that subregulation D, where it says prior approval of audit committee of HPDLE shall not be required for RPT to which the listed subsidiary is a party, but the listed entity is not a party. Then they say regulation 23 and 15, if it applies, then they don't have to take the audit committee approval of the HPDLE. This is exactly a ditto from what is given in 23. I feel that here what they should have mentioned is that HPDLE is also a subsidiary. In other words, the subsidiary is also an HPDLE, then this approval will not be required because on a standalone basis, anyway, these entire regulations will be applicable to them. They will anyway follow. That's how it should have been actually, but somehow I think it has not come out in the way it has to be.
See, in fact, when I was mentioning about that, they have used the word listed entity and high value debt listed entity. That, according to me, it is one and the same. They are not two because we cannot interpret that listed entity means equity listed entity and high value debt listed entity means debt listed because it may so happen that you are having only the debt listed entities listed. Your equity is not listed. Then how you will read this one listed entity and high value debt listed entity?
No, I agree to your point, but the regulation reference is 23 and 15 under chapter 4. Chapter 4. That's what.
True. Yeah.
Yes.
Sudhakar, I think just go back. I
Yes,
think
ma'am.
what you are telling was correct. Go back to that slide only.
This one, ma'am?
No. The same thing. That what you are telling listed entity, they are, I think, specifically referring that listed entity which is equity. It may also having high debt value, high value debt listing, and this second portion they are referring only the listed entity which has high value debt listed. And that's why even here it is they are referring annual consolidated. Here they are referring only annual standalone. So that's why this may be difference.
Because if you take like that, Deepti, if you read chapter 5A, there are races where they have simply used the word listed entity.
Yeah.
And suppose, say, for
Yes.
example, your company is not a equity listed, your company is purely debt listed. And if you take this view, listed entity means equity listed and high value debt listed entity means like this, then you will not be able to understand chapter 5 at all.
Yeah,
Because
I know.
they're using the word interplay, they are doing it.
Yes.
But here specifically, I'm saying actually here only I think they are using, but it will be confusing because it should be very clear equity listed and that way if they want. You are right.
I don't
This
know.
is confusing. Yeah.
So what I'm trying to say is there is an aberration here. This need to be addressed by SEBI. We cannot simply conclude it either way. But certainly there is an aberration. This is what I'm
Yeah.
trying to bring to the notice of the participants.
And as you rightly said, whatever is trigger, we will follow, check that. What is accordingly will work out.
Correct.
Yeah, yes, sir.
Yes. Regulation 62K, again related to related party transactions. Audit committee may grant omnibus approval for related party transactions proposed to be entered into if the nature of the related party transaction is repetitive, and the audit committee shall lay down criteria, specific criteria for omnibus approval in line of the related party transaction policy. Audit committee shall satisfy itself regarding the need for an omnibus approval for the particular transaction, and the approval shall specify name of the party, nature of transaction, period, maximum amount, the indicative price, and the formula for variation in price, if any, particularly in case of omnibus approvals. Where the need for related party transactions cannot be foreseen, and the details are not particularly available, the audit committee may grant an omnibus approval, but the limit for the same should be up to 1 crore per transaction. The audit committee shall be required to review such transactions on a quarterly basis, and the time period for validity shall be 1 year for such omnibus approval.
See, here also, they have introduced that ratification and all in Regulation 23 in the 12th December amendment. Those were not covered here again.
Correct,
That
correct.
ratification.
You said actually it is a sort of a cut paste sort of thing, not taking into consideration what has been issued on 12th December. It has come out separately. So as you rightly said, again the same. Tariq pe tariq, amendment pe amendment.
But incidentally, the corporate governance report, the quarterly corporate governance report, has a section which talks about RPT, and it also has a line item complaint which talks about any ratification done by audit committee. Though the regulation does not say that.
में यही problem होता है यार. When you do the cut paste, this is the problem. What happens? So even you require cut paste, also you require intelligence. So here, I mean, look, when I was actually visualizing that why this would have happened, only thing what could have happened is that they might have taken that chapter 4 as the base, started amending in that. In that process, what happened is several key things have been left over. Yeah.
One of the most important changes relating to related party transaction approval in case of high value debt listed entity is that all material related party transactions and the significant modifications shall require a prior NOC from the debenture trustee, who in turn shall obtain such NOC from the debenture holders not related with the issuer and who hold at least 50% or more of the value of debentures on the basis of voting rights. So this is a new introduction, particularly for high value debt listed entity. It was not seen in equity regulation 23.
So here actually they are trying to bring the same thing, that the related parties should not vote on the related party transactions. Okay, so here what they are trying to say is that by that NOC is to be obtained by the debenture trustee from those debentures holders who are not related with the issuer and holds at least 50% or more of the debentures in value on the basis of voting. Okay. I think more or less that is the concept is the same.
Surprising when it comes to shareholders approval, they've not given that norm that non-related, related shall not vote on the.
No, that is because it will all be closely held company. It will be an impossibility of compliance. That's the reason they have left out, even related party shareholders can vote. Only the related party debenture holders cannot vote. And in terms of, approvals, it's a 4-stage process now. First, for the material RPT of HVDLEs. One is the audit committee approval, then the debenture holders consent, that is more than 50% present and voting, and then the debenture trustees NOC, and then followed by shareholders approval through ordinary resolution, in which any related party shareholder can vote. There is no prohibition as such. And if the entity is both equity listed and debt listed, then they need not worry about this. They can follow 23 because the 62(1)(c) clearly says This is only applicable for entities which has only listed their NCDs basically. So that is the difference.
Correct.
And one more point is that to which kind of RPT this is applicable, as they are provided in the beginning that these regulations are applicable from 1st April 2025. So any RPTs which is going to be taken from 1st April, for which the approval is going to be taken from 1st April 2025, these approval norms will be applicable. Either it is audit committee or it is the material. If it's a material RPT, the 4-stage process. And for RPTs for which if the company has already obtained approval in March, for example, generally all companies seek approval for RPTs for the next financial year during the close of the earlier financial year. Most of the companies take it during the March because from 1st April, they wanted to commence the transaction. So in those cases, in my view, it may not be applicable, but it will be good for any entities, HPDLEs who are going to issue debentures to mention this fact in the offer document, as well as probably, put it as a part of the debenture trustee agreements that, these the RPTs approval which has already been taken.
John, that
Yeah,
what you are talking about is omnibus approval you are talking about. Okay. But here it is material related party transactions. So I agree with you. Any approval you are taking for material related party transactions after 1st April 25 or any modification there too, you have to go for the NOC from the debenture trustee. But very
Right.
surprisingly, in the chapter 5, they have provided that if any material related party transaction prior to 1st April 25, any modification there too, you don't need to go for NOC. I really fail to understand why it is so.
But
If you see
modification,
regulation,
yeah,
so regulation 23, it says that any related party transaction entered into prior to the notification of these regulations, if there is a modification subsequently, you have to go to the same procedure.
correct.
Whereas here, specifically, it is excluded. Any material related party transaction prior to 1st April 25, modification to that, no NOC is required.
Which is in conflict with 23 actually.
In one way, yes. But if you are only debt listed, you are safe. You can play safe for that.
Yeah.
Yes, go
Similarly,
ahead.
for any, for
Correct.
the NCD issuances post 1st April, all these approvals will, you will have to obtain. What has already been issued, then there may not be an approval.
Correct.
Yes. After obtaining the debenture holder's approval, the requirement of shareholders' approval shall also be there. In case the NOC has been withdrawn by the debenture holders, then the matter shall not be put forward for shareholders' consideration. And like Sudhakar sir and Sham sir have already mentioned, that NOC shall be obtained in respect of the listed debt securities on or after April 1, 2025. Any existing or prospective material RPTs as on 31st March 2025 shall not require such NOC, and prior shareholders' approval and NOC shall not be required for related party transactions to which the listed subsidiary is a party, if this regulation is applicable for the listed subsidiary as well.
Yeah, one more point to be noted here is that the material RPT, there are two types of material RPT, one which comes under the listing regulations and one material RPT which comes under section 188. There are differences between the two actually, because 188 as per the rules specifies certain specific transaction and gives thresholds for which you will have to take the shareholders approval, and let us call it as a material RPT under Companies Act. So for any material RPT under the Companies Act, only the concerned related party cannot vote. So if the HPDLE has a material RPT which does not fall under the Chapter 5A but falls under the Companies Act Section 198, in that case, they will still have to follow those provisions and take the necessary shareholders approval. Yeah, over to you.
Yes. Thank you, sir. Provisions related to Sub-Regulation 345 shall not be applicable in case of transactions between two government companies, transaction between holding company and a wholly owned subsidiary whose accounts are consolidated, and two wholly owned subsidiaries where the accounts are consolidated with the listed entity. Further, the high-value debt-listed entity shall submit disclosure on RPT to the stock exchanges, along with the the standalone financial results for the half year. Non-applicability and disclosures, which we've already discussed. Regulation 62.
One technical point
Yes.
I would like to highlight. All along, this has been saying the material modification, you have to get the NOC of the debenture holders and the debenture trustees. And it talks about voting as well. So, though technically they may call it NOC, it will be in the form of a resolution which you will put forth for the voting, and it could be drafted in such a way that resolution specifies that the debenture holder does not have any objection. That's how it should be. So, there not be any confusion between whether resolution is required or not, because they have clearly mentioned it is present and voting. So, it will be in the form of resolution which will have a no objection. Yeah.
Thank you, sir. Moving on to Regulation 62L, which relates to corporate governance requirements with respect to unlisted material subsidiaries of high value debt listed entity. At least one independent director from the high value debt listed entities board must be on the unlisted material subsidiaries board, whether it is in India or not. In this case, material subsidiary shall be defined as a subsidiary whose income or net worth exceeds 20% of high value debt listed entities' consolidated income or net worth in the previous financial year. The high value debt listed entities audit committee must review the financial statements and investments of the unlisted material subsidiary, and the minutes of the unlisted material subsidiaries board meetings must be presented to the high value debt listed entities board as well. The unlisted material subsidiaries management should periodically inform the HVDLE's board of significant transactions or arrangements. In this case, significant transactions or arrangement has been defined as any individual transaction that exceeds or is likely to exceed 10% of the unlisted subsidiaries' total revenues or expenses or assets or liabilities for the previous financial year.
See, in fact, these were also earlier there actually, but earlier the regulations refer to the equity listed provisions. Now they have brought it out expressly under Chapter 5.
Right, sir. Further, in case of selling, disposing, or leasing of assets exceeding 20% of the unlisted subsidiaries' assets in a financial year, shall require a special resolution, particularly unless it is pursuant to a court or tribunal approved scheme or insolvency procedure. The disclosure of the insolvency resolution plan shall be given to the stock exchange. Only in this case, they will be exempted. In case there is a reduction in shareholding of high value debt listed entity in the unlisted subsidiary to 50% or less, or the high value debt listed entity relinquishes control, this shall require specific approval from shareholders by way of special resolution, except if it is pursuant to a court or tribunal order or an approved scheme of corporate insolvency resolution process. If the high value debt listed entity has a listed subsidiary, which itself is a holding company, these regulations shall apply to that listed subsidiary. Regulation 62M relating to Secretarial Audit and Secretarial Compliance Report. High value debt listed entity and its material unlisted Indian subsidiaries must conduct a secretarial audit and include the report along with the annual report of the listed entity. And the high value debt listed entity must submit a secretarial compliance report to stock exchanges within 60 days from the end of each financial year.
So here also, they have not talked about the appointment of secretarial auditor procedure.
Right.
Unlike your chapter 4, where you need shareholders' approval, the 2 terms of 5 years,
5
etc.,
years
etc.
and all.
Okay,
Yeah, correct.
those are not here. So, if your company is a purely debt listed entity, those provisions are not applicable to you. Only thing is you have to get the secretarial audit and secretarial compliance report. But that secretarial auditor board can appoint. No need to go for the shareholders' approval. At the same point of time, appointment for a period of 5 years, those restrictions are also not applicable to you. Yeah.
Moving on to Regulation 62N, obligations with respect to independent directors. No person shall be appointed as an alternate director for an independent director of a high-value listed company, listed entity, and the tenure of the independent director shall be in accordance with the Companies Act 2013 and the rules made thereunder. The appointment, reappointment, or removal of independent directors shall require special resolution passed by the shareholders. And in case the special resolution fails, then if the votes cast in favor of the resolution exceeds the votes cast against, and the votes cast by the public shareholder in favor of the resolution exceeds the votes cast against, in that case, it shall be deemed that the resolution for the appointment has been approved. Further, in case of removal of such an independent director who has been appointed or reappointed pursuant to these calculations, then for the removal also, the criteria shall remain the same. The independent directors must hold at least one meeting every year without the presence of non-independent directors or management, and this shall be for the review of the board performance, chairman performance, and information flow within the company. And the independent directors shall be liable only for acts of omission or commission with their knowledge, consent, or in case of lack of diligence on their part. The company shall undertake directors and officers insurance, D&O insurance for all its independent directors, and vacancies in the position of independent directors shall be filled within 3 months unless the high value debt listed entity already meets with the minimum number of independent directors requirement. Every independent director shall submit a declaration of meeting the
In fact,
criteria.
just wait 1 minute.
Yes,
See,
sir.
this D&O policy in case of chapter 4 for equity listed companies, only top 1000 listed entities it is required. Whereas here, for all the debt listed entities, high value debt listed entities, I meant to say, you require D&O policy. No exception here. This is again a kind of an aberration, or that is the intention. I don't know that. Okay.
So every independent director shall be required to submit a declaration that they meet the criteria of independence at the first board meeting in which they participate after their appointment. Thereafter, in the first board meeting of every financial year, or whenever there is a change in the circumstances of their independence, and the board shall take on record the declaration after due assessment. A 1-year cooling off period is required before an independent director who has resigned from the board of the high value debt listed entity is appointed as an executive or a whole time director on the board of the high value debt listed entity, its holding, subsidiary, or associate company, or on the board of a company belonging to the promoter group of such high value debt listed entity. Regulation 62O dealing with obligations with respect to employees, including senior management, KMP, directors, and promoters. So directors cannot be members of more than 10 committees or chair more than 5 committees across all listed entities. This is in line with the applicable norms for equity listed entities. And the calculation of the limit of such committees shall have all listed or unlisted public limited companies and high value debt listed entities included. All other companies, including private limited companies, foreign companies, and Section 8 companies, shall be excluded for the purpose of this calculation. Further, for the purpose of determining the limit, the chairmanship and membership of the audit committee and the stakeholders relationship committee shall be considered. The director shall inform the high-value debt-listed entity about the position occupied in the committees in the other companies and changes, if any, pursuant to that. The directors and senior management must affirm annual compliance with the code of conduct, and the senior management shall make disclosure to the board of directors relating to all material, financial, and commercial transactions which may have their personal interest involved. No employee, including KMP director, promoter of the high-value debt-listed entity, shall enter into any agreement with any shareholder, third party, or any other person with regard to compensation or profit sharing, dealing in securities of the high-value debt-listed entity, unless there is a prior approval from board of directors as well as public shareholders by way of ordinary resolution. Such agreement which is already subsisting or has expired, which was entered into during preceding 3 years, shall be disclosed specifically to stock exchanges by high value debt listed entities, and any subsisting agreement in place shall be placed before the board in the forthcoming board meeting. And if the board approves the same, shall be put forward before the public shareholders for an ordinary resolution approval.
Just 1 minute, just wait.
Yes, sir.
In the previous slide. See here, what they say is that agreements for
Yes.
See, such agreements subsisting or expired entered during the preceding 3 years shall be disclosed to the stock exchanges. So please, suppose say for example, your company got listed today, high value debt listed entity, then you have to also ensure that any such agreements are there in the previous 3 years or expired. It might be expired, but still you have to disclose it to the stock exchanges. So that is what the wording is here. Okay.
Regulation 62P dealing with vacancies in respect of certain key managerial personnel. So vacancy in the position of CEO, managing director, whole-time director or manager must be filled within 3 months of such vacancy. And the requirement to obtain approval of regulatory or government or statutory authorities shall be required if the vacancies are filled, if the company is not able to fill the vacancy within 3 months. However, this shall also be extended only up to 6 months from the date of vacancy. Vacancies for CFOs shall also be filled within 3 months of such vacancy, unless they have particularly obtained the approval from a regulatory, government, or statutory authorities, in which case the timeline will be extended to 6 months.
So here also the same problem, say, where is the guarantee that within 6 months you will get the approval? See, you may pursue the matter with the concerned regulator, but it may happen, it may not happen. So the kind of a carve out which has been given in chapter 4, that is the best, by that whatever the time period is there, that will not be taken into this the 3 months time period. But here,
that exclusion just should come here actually.
Here also it should have come. Here also
it
should have come. Unfortunately, it is not there. This, of course, here they have provided that 3 months extension. That means instead of 3 months, it is 6 months.
Yeah,
that is a great help.
Correct. That is right.
Yes. Regulation 62Q, other corporate governance requirement for high value debt listed entity must submit periodic corporate governance compliance report to the stock exchanges within 21 days. And the contents of this same shall be relating to material related party transactions, cybersecurity incidents, breaches, or data loss, which shall be included apart from a number of information to be furnished. The compliance report must be signed by the compliance officer or the CEO, as the case may be, and high value debt listed entities. Annual report must also include BRSR reporting covering the environmental, social, and governance disclosures. With this, I come to the end of my presentation. I'll just stop sharing the screen for questions and discussions on this.
Okay, we will now run through the questions. Some of the questions we already taken, but let me run through what are the things are. Can a SRV listed company can grant a loan to the promoter group of the company, and will it be fall under the RPT? If yes, what will be the threshold and the procedure for the same?
And you will take? And you're on mute.
Yeah. See, here the promoter group company will come under the definition of related party. Okay. And the related party definition also includes related parties as defined under Ind AS. So the question is whether the loan transaction per se will come under the approval process, and the loan transaction are not covered under 21ZC. So this has to be examined on based on the exact facts of the case actually.
Yeah, it appears to be a very specific questions. I don't think we'll be able to provide the
It is
straightaway
not
answer for that.
related to our, yeah.
Yeah, that is right. Okay. Somebody has put actually quarterly financial statement can give only a balance sheet wherein the net worth can arise. I think Sudhakar already explained this initially on when we are talking about the turnover and the net worth, how to take a track of it, and I think he explained actually.
Yeah, one has to compute the net worth on an ongoing basis actually.
Correct. That has to be monitored actually. If a director is on the board of a company, which is actually a equity listed and debt listed as well, I think this question we answered, whether it will be taken
Yeah,
two
we
or it
answered.
will be taken one.
It's
That I think
only
we
one.
answered actually. Yeah, that is right. One question that if a company, both equity listed, debt listed company, is it 15 to 27 of the LODR will be applicable? Understand what about the provisions that are being carved out and told? I think that also we discussed elaborately. I think we already spelled out this.
Yeah. In case of RPT, it is very clear that if you are covered under 23, you will have to follow 23 if you are equity listed. And in terms of certain debt-related disclosures, you will have to follow what is given under Chapter 5, over and above what is applicable for equity listed. For example, in the financials and all, you will have to give certain specific ratios which are not relevant for equity listed entities. In case your debt is listed, you will have to give all those ratios. So similar to that, any additional compliances arising for the debt, you will have to give it. You will have to do it.
Can a WTD, who is also a CFO, can take a give loan to the company out of his own fund?
This is not related to Bala. Take next.
Okay. If the employee has the demerged company, how to be
Again, this
transferred
is not
demerged?
related. Next.
Somebody is asking you to tell you the inclusion of the commission unclaimed dividend, etc. In case of the shares unclaimed consecutively 7 years, kindly explain. Example, what 7 consecutive years?
Again?
Maybe, yeah.
I think
Not
that's a
related to
separate
this.
topic.
Separate topic he is asking actually.
Yeah, please go ahead.
Then the applicability means chapter 5A are applicability only to such entity whose only high value debt securities are listed and does not have any listed specific security and not conflict with the chapter 5 and 5A.
No, it has been mentioned in 62C1 clearly that this chapter shall apply to listed entity which only has non-convertible securities, debt securities listed with an outstanding value of rupees 1,000 crore or more.
Regarding the applicability,
And does not have any other specified securities. So it is only for debt listed entities.
See, debt listed entities which are 1,000 crores plus, Chapter 5A is applicable. If it is less than 1,000 crores, Chapter 5 is applicable.
Fine. Yeah.
regarding the applicability as the body corporate, is it applicable for the foreign subsidiary?
Yes.
Is a high value debt entity is not a company, but a body corporate formed under the own act, whereas it needs to comply with the provision of the Companies Act as mentioned in this chapter.
The listing regulations have not distinguished between company and body corporate. They have used the word listed entity. So entity covers both company as well as body corporate also.
What is the net profit is as per section 197? Of course, it has to be calculated according to that only.
198.
Yeah, 198. It is the case mentioned 197. It should be 198. A company has filed the DRHP and in the process of the SME listing. The company has appointed the various committee and appointed independent director as required SEBI LODR. Whether the company has to conduct the various committee meeting now itself or only after going listed.
Now itself. The moment you constitute a committee, obviously you have to start complying with the provisions also,
Mm.
irrespective of your listing.
Here, a SME company can grant loan to the promoter group of company and will it be a RPT and what will be the threshold to provide for the same? As per the LODR 212B, is it considered related party under loan transaction and not covered under the 21ZC of the LODR?
Yeah, this we already discussed.
But say definitely it is covered under Rule 21ZC because you need transfer of resources. Okay, so it is covered. Whenever you are giving a loan to the promoter company, it covers under the related party transaction and you have to ensure the necessary compliances.
Yes, SEBI listed constitutes the management committee, though it is not applicable to the company. Whether the committee is required to meet 2 times compulsorily or 1 meeting enough for the risk management committee, is it not applicable?
Can you repeat the question? Sorry.
A SME listed constituted the risk management committee, though it is not applicable to the company.
Okay.
Whether the committee need to meet 2 times compulsorily or 1 meeting is enough, since the risk management committee is not applicable to this company.
That will depend on the terms of reference, what they have agreed, what the board has mandated them to do.
See, under the Companies Act, any provisions you are doing voluntarily or constituting the committees and all, it was expected that you have to comply with the provisions
Comply.
under the Companies Act. So here also, if a SME listed company is there, you are constituting, it is advisable to comply with whatever the regulations are there.
Regarding 62K, identical provision of 23(2) and the identical provision of 23, the subsidiary has also the exemption. I think this we have discussed. He is talking about the same exemption, which is actually there, which we talked about it actually. Can a SME listed company grant loan to its promoter? I think same question is repeating again. All the time. 62K says non-related debenture holder holding 50% or more, the debenture is valid. What would be the course of the action if the non-related debenture holders hold less than 50%, say 45%?
They're not required. See, they said only 50% and above it is required.
Okay.
So the question is that where that debenture trustee has to take the consent. NOC in that non-related debenture holder with the value of 50% on both. So he is telling
Correct.
when non-related is that is the question.
See, when it is non-related, they're having less than 50% voting. Then it is the debenture trustee need not take the NOC from them. Only debenture trustee has to give the NOC. That's it.
Okay, somebody is asking sharing the video. I think this is available on the YouTube. After this, it will be disseminated so that you can actually access it here. Please share the video link. That's what he's saying here. If ID not appointed within 3 months in its what is it?
Maharatna company. Yeah.
Maharatna. Okay. Navaratna. Acha, Maharatna company. Navaratna company. What is the implication of the non-compliance?
The implication is, we have seen already SEBI started imposing penalties on such companies. And in fact, in one of the company, they have recently imposed a penalty of about 8 to 10 lakh rupees, and they have approached SEBI to reduce that penalty. If those companies are not complying with, SEBI is imposing penalties on them. In fact, recently I came to know one of the companies, even that company is having less than 3 directors. Can you believe? They are not even complying with the Companies Act provisions, because that government has to appoint the director. They are not appointed. So they are having less than 3 directors. It is a public company. Forget about the 7, whatever the directors are there and committees and other things. So it is a really pathetic situation in that company. They are not even able to comply with the Companies Act provisions. Then definitely you have to invite the penal consequence. So that's it.
Next one, somebody put the loan transaction is not a RPT as per the Companies Act 2013. That means, I think, some previous question he is referring, I think so.
Loan transaction as per the Companies Act is a related party transaction. Only thing is that doesn't require approvals under 188. It requires approval under 177. This we have very clearly informed in the Masterclass on Companies Act provisions.
Yeah, you are right actually, because people think if the 186 not applicable, then nothing is applicable, but 177 is more wider. So under 177, it has to go to the audit committee. Yeah.
Correct.
In regulation 24A.
And let me also clarify that even that is the same the situation as far as your listed companies are concerned also. Whether board, because listed companies talk about audit committee approval and shareholders approval. They don't talk about board approval. So giving loan to a related party, it falls under the related party transaction, that is rule 21Z(c), and you have to have the approval of the audit committees. Prior approval that also.
In regulation 24ALE, it is the material unlisted Indian subsidiary whose turnover net worth exceeds 10% of the consolidated turnover, the net worth respectively of the listed entity, to undertake a secretarial audit to peer-reviewed secretarial auditor. However, under Rule 62M, the definition provided for material unlisted subsidiary, can this be the same?
Basically, the definition of material unlisted subsidiary is not provided in regulation 62M. So whether
Correct.
it is same, that is the question.
That is the question, right?
I think if I am not wrong, they have provided a definition under, if not 62M, somewhere in the chapter 5A for material unlisted subsidiary. If it is
Yes,
not there, you may have to borrow it from chapter 4 only.
Yeah, chapter 4 it is there.
Yeah, chapter 4 it is there, definitely it is there. What is the threshold for special resolution and the prior approval clause for RPT?
Not here. Next.
Does sitting payment requires RPT approval?
Not next. RPT का पूरा आ रहा है.
Can the financial statement be reviewed by the audit committee having inadequate members of IDs?
No. Next.
Non-compliance. Can audit be also assigned responsibility of the...
Just let me clarify here. This is connected with this thing, though not amendment as such, but if the audit committee is not constituted with sufficient number of independent directors, it means it is as if it is not constituted and it cannot do any approval. It is a non-compliance, that's it.
Can an audit be also assigned responsibility of the risk management committee and a single committee be constituted of the same audit and risk management committee?
No.
No, you can't.
Is audit committee not applicable to the company loan transaction is RPT?
Board has to approve.
Material related party transaction with the listed subsidiary for financial year 2025-26 related approval of the audit committee and shareholders approval obtained by the holding the listed companies prior to 30th June 25. Do we compulsorily need to provide comprehensive information of the transaction to the audit committee and shareholders?
I think this is relating to the industry standard which is applicable from July.
Yes.
So this, if you have already taken the approval, you need not give any modification to that, then you'll have to follow with the ISF.
See,
I think
whatever
that-
approvals you are going to take after 1st July 25 from the audit committee or from shareholders, you have to provide the information.
That is all. I think I have come to the end of the questions.
Very good.
The next is actually thank you. Okay. So
to
anybody
sum
would
up
like to, anybody
one
raising the
point.
hands so we can see? Yeah.
Now, I'd like to sum up with some of the points. So, having regard to these amendments which has come into force, some of the critical action points would be like, to check the limits of the directorships of your directors, intimate them, sensitize them. Then, in case you don't have a risk management plan, please ensure that you put up a risk management plan. And NED who is in office for more than 5 years, ensure they retire by rotation. Get them to the shareholders and seek their approval. And similarly, single NED remuneration more than 50% of all other NEDs remuneration, you need to take shareholders approval. RPT assessment approval, you will have to plan, and determination of related party, it has to be done as on the date of the seeking approval. You will have to determine who are all your related parties and plan for the vacancy which is going to arise in the near future, so that you will have to ensure that the vacancy is filled prior to that vacancy getting created. Then, yeah, these are some of the critical action points which you will have to immediately act upon.
Very good sum up, Sean.
Yeah. I think
This is
questions
something
is
which will
answered.
be,
Yeah, son, sorry.
no, this is something which everybody has to be mindful. They need to
Yeah.
immediately act upon. That's the reason I just thought I'll summarize these things. Yeah,
So you are
thanks.
giving course of action to be taken subsequent to this amendment explanation.
Yes.
Okay, thanks a lot. That's an extra contribution. Much appreciated. And there is no raising of hand except Mr. Bala. So now I think we can conclude. And thanks a lot, Shan, for your time, your inputs, your sharing experience. Thanks a lot. Thanks, Sudhakar.
Thank you for the opportunity. Yeah.
Thanks, Sudhakar, for your inputs. Mr. Bala, Jaswin, for wonderful presentation. Thanks, all the participants. Thanks. Thank you a lot. See you next week.
Yeah. Thank you.
You.
Thank you so much.